Good Sunday afternoon where I'm at, probably afternoon where you're at. So I'm going to do a quick look ahead coming into this week because if you've spent any time looking at anything via the market this week, you are probably hearing the same thing I am hearing, which is everybody is expecting, looking for, or convinced that we are seeing change in the market. For me personally, excuse me, I spent a lot of time over the last 2 years really thinking, I had to know. I had to be the first to see, if change is happening. And excuse me, since then, what I've realized is it really doesn't matter. There's about as obvious clues as can be that we're looking for right now as far as what change is and where change can occur. First and foremost, when I'm looking at the NASDAQ here, and I'll go through the NASDAQ, the Russell, and ES, obviously. I'm not going to get to the Dow. My views on the Dow are my views. I don't like sharing them too often, but these are the most commonly traded markets. So, when I'm looking at the NASDAQ here, there's two very, very clear balance ranges that I would be looking for any type of movement, right? Or move to, sorry, I should say. So, first and foremost, we're up here right now. We've seen a little bit more aggressive, I guess you could say aggressive selling, as opposed to what we're used to seeing on these pullbacks, where you usually get the 1, 2, 3 type days and then boom, jam it right back up the bears. But for me, all I'm looking for is, this is a very obvious and very clear balance range in the 800 to, the 15,100 area. So a 300-point balance range where you spent a significant amount of time. Keep in mind, I'm a time-based trader. When I look at the profile, when I look at these charts, I'm not a volume-based profile individual. I do believe volume plays a role. I just don't put as much on volume as a lot of people do, which is fine. Everybody sees the market different. There's no right or wrong way to do it as long as you're extracting moolah each and every day. But from a looking ahead side, all I'm really looking for is, what happens when these laggard buyers who chase this market, and this is about as clear as a chase as you're going to get, right? This was the most aggressive, and you'll see this in all three markets. The last time we came to the 50 and we bought from the 50, this is hands down the most aggressive buy that we had off the 50 since we've kind of been running that, type of trend. It came right into the 50, heavy buying, right? Everybody was sitting there. So what does that tell me is the people that were sitting here missed, almost all of the other opportunities that happened with the 50-day. They missed almost all of them, right? And they were not going to miss it this time. That's the context I came into. As soon as I saw that, that's the context I painted into the market itself. So when I'm watching this, this heavy buy off the 50, super aggressive, like I said, across all three markets we're going to go over. All I'm looking for now is to see if these laggard buyers get pushed back into balance, thus getting taken out, right? Once they're taken out of the market and we come back towards that 50 and we come back towards this 300-point balance range from 14,800 to 15,100, what happens when we get into there? We're going to find a new buyer. We're going to find a stronger, more passive buyer who's willing to take the market up and higher. Or do we just slice right through this and look to really get down sub 14,000 into what I would consider to be the stronger base, the stronger area of pause if we do trade down to it, which is where a lot of the stronger buying came in for this last kind of push. I shouldn't say last, potential last kind of push to the all-time highs. Now, finishing off here at the daily, when I'm looking at this, there is no completed high on this at all in the NQ, none whatsoever that I see. So I'm not convinced that we're ready to go. I wouldn't be shocked, from the NASDAQ perspective, as if we come into here, we get one more big rally somewhere towards that 16,000 area, get some sort of an aggressive sell-off from around there that leaves some sort of, doesn't have to be perfect, but some kind of completion to the upside, which could then potentially move into more of a liquidation type market. So from a day time frame, chart, that's kind of where I'm at with NASDAQ. A daily chart, that's where I'm at with NASDAQ. Now, for me personally, I'm a day time frame trader. So I'm waiting each and every day to execute based off the day. So for me, you know, the levels that I came into this week with and the levels that, you know, I'll continue to move forward with, it's quite simply for me, 15520, 15545. That's the obvious resistance. It doesn't take a brain surgeon to find that. If you can't find that, reach out. I can help you find it. It's not hard. No, finding levels in the market is not, it takes no brain power. Anybody can do it. People just refuse to put the work in to get to the point where you can do it. It's the dumbest part of trading, right? Levels, dumbest part. Don't be, you know, levels. They're just another way to visualize what potentially could happen in the market, where could potential change take place in the market, right? From there, you know, this 15270, 15285 is an area where you could see a potential rebid. I think if they do bring this below here, your next stronger area of a potential rebid for me is 15145 to 15120. And then all the way down here where I would consider to be the strongest rebid is in your 14820 to, you know, 14780. So this would be my strongest rebid. So if it does pull back down to here, that's kind of where I'm looking to potentially load the boat a little bit stronger. As far as this lower range here and this upper resistance here, this is just clear, you know, this is clear supply. This could potentially be clear demand. And this is just a you know, potential for a balance range, with this kind of being your mean within that balance range. So when I'm watching this, you know, last week on the NASDAQ didn't look very scary to me. You know, it looked like we had strong liquidation, which have come again from the same pattern that we've seen in this market time and time again, which again would tell me the potential of this just being late legger buyers getting themselves carried away yet again, which has caused almost every single liquidation event we've had over the last little bit here to the 50. You know, they liquidated them. They got below this resistance. They retested that resistance very, very early and found a seller. And from there, they just really balanced the week out. And we never really saw much of an aggressive move. So for me personally, you know, do I think we're seeing change as of right now? I mean, no, not in the NASDAQ. I don't. I think if you get below 1520 and get below the potential 50-day moving average and into that balance range we just talked about and get through that balance range, then yeah, sure, you might be seeing change in the market. But even if you do get through all that, you're going to have some sort of relief rally, which is probably going to be the best and you know, most patient opportunity to get short in this market, which you've been short in this market. Oof, it's a good chance you're going broke. So that's kind of my thoughts on the NAS. Now, we'll move over to ES here. Let me grab my daytime frame ES chart. So again, taking a look real quick at the daily on the ES. Now, the ES is the most clear and consistent market as far as buying the 50-day moving average. It has happened time and time again. You know, really since this initial break, one time, you know, two time where you get the rally, three time, four time, five time, six time, seven time, eight time, nine time, blah, 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 right? The 50-day moving average has been the springboard. I don't know why people are trying to create something other than what it is. The 50-day moving average is the springboard. That's what's the most valid moving average right now in the market. Keep in mind, context matters in all market. What you can't just say this is that and that is the other without taking into you know, taking into consideration what the context is. And I've been a strong believer that ever since this gap up here, which we're going to get back to at some point, remember we spent so much time in this grindy move, and then, you know, just we had these little volatility pushes, and then you had this big gap up on a double Globex day, big gap up, and then from there it kind of, you know, rallied and never stopped. So for me, I'm looking at this as, you know, the lack of strong, aggressive pushing without needing that pullback could potentially, again, mean that we're looking at shorter time frame buyers, shorter time frame money getting into the market. But understanding that contextually, you know, the market is taking on more new money than it has in a very, very long time over the last 8 or 9 months. So there's an injection of a lot of money into this market that needs to be put in on the buy side, most of it. And that likewise, why you get such a very mechanical, very obvious move, kind of like we're seeing now. So if we get below the 50-day, you know, the very first, in my opinion, the very first thing that we need to look for is, does this low over here from August hold? If we get below August's low, well then, I'll be looking for the 4,200 retest, which I believe 4,200 is probably going to be your strongest springboard as far as where the best support is. Now, once you get to this support, if you slice through that, you have the 200-day, and I can almost guarantee you, if we get down to that 200-day, you're going to see a heavy buy reaction off the 200-day, barring some crazy catalyst that pushes us, into some sort of meltdown, which could come from China or something or whatever, right? You don't know. That's the point of a super strong catalyst, is you don't know. It's like COVID. The market, remember the market prior to COVID? Heavy repo. Apple was just going straight up all the time. It was kind of Apple and repo, Apple and repo, Apple and repo, right? Repo would push you up in the Globex. You'd wake up, you'd grind out, you'd balance, go to bed. Repo push you up in Globex. You grind up, you balance, go to bed, wake up, so on and so forth. Right? It's the same pattern, never really changed. That's why pre-COVID we had 14 or 15 gaps on that move up, which COVID shows up, a catalyst that not one person saw coming, and boom, you run through all that structure, you clean it all up, and it happens like that. Now, that exact type of move could very well take place if we get a catalyst that nobody knows is coming. Again, there's no point in trying to predict what's going to cause the next market sell-off because none of us know. That's kind of the point of it. But as far as a liquidation and a pullback to bring in, the stronger money back into the market at a more, encouraging level or more attractive level, I think your 4,200 to just below your 4,100 is probably going to be the area where you could potentially see that. Now, again, I'm a time-based trader. So when I look at this chart, where have I spent the most time, since December is right here. This is where I spent the most amount of time, the most amount of days trading within one area is that range there, which again would tell me that that is where I want to watch for a response if we take out August's low, if we go off or below the 50. If we don't do any of that, well, let me tell you, there's just as many stops sitting right above here from last week's highs, which are very, very bad in nature, that could easily project this market up again towards 4,600 and beyond. So I'm very, very neutral in ES. I'm very neutral in NQ. I just don't see any reason to switch sides, super bearish, super bullish. I think we're at a very obvious level. We'll see if that level holds forward and pushes us again back up, or even if they try and trap below the 50 and then rally it. Anything is possible, right? That's why it's so important to just get an idea from this. And the reason I've kind of stayed away from getting too involved in the market calling over the last little bit, it doesn't matter. It just doesn't, okay? The context of this market hasn't changed. It hasn't changed in 9, 10, 11, 12 months. There's absolutely no reason to come up with your own context. It's been the same. The Fed is buying everything, or was buying everything. There's plans to buy everything. Does that change, with the FOMC this week? Maybe it does. But I think, again, everything that we know could potentially happen with the Fed changing, they've already told us. So you're not going to see, in my opinion, a big market meltdown that everybody thinks is coming. You're not going to notice or see what that catalyst is. So same idea when I'm looking at ES. So I have some, levels again, levels, just areas of interest, right? So first and foremost, kind of where we pushed into late Friday on what was, again, more of a liquidation type profile is somewhere around that 4,400 area. That's going to be your strongest rebid location for right now. That's probably somewhere just below the 50-day moving average, or sorry, quite a bit. 50-day moving average is up here somewhere, 22 or something like that. But once you get a little bit below, that's why I'm saying they could potentially push into what I would think is a rebid location, which I have actually from about 393 up until about 407. So 4407, 4393 as being a strong potential rebid location. So that's why I'm saying you very well push into this, rebid this, and trap a bunch of people getting real hot and heavy, thinking that the market's about to collapse, and run it right back up to this resistance, where when you look at this resistance, you cannot tell me that you feel that is secure. Okay, you just can't do it. No, you can't with a conscience or any level of market understanding. Look at that and say, yeah, it looks like that's really, really secure. No, it's not. Right. What you really had, in my opinion, is they finally broke below what was support. and this support goes all the way back, this has been an area of interest in the market for quite some time. And what happens is they pull back into that support level. They find support, find support, find support. You finally get below it. You come up, you make your afternoon rally high, which is where they resell the market to finally get below that support. So if you want to look at it, I like my level as is, but you could really just put a line here and say, if you want to just really simplify everything in life, you can put that line right there at 44.88 and say, as long as the market stays below 44.88, the same participants are selling this market. Plain and simple. It's as easy as it gets. So for me, if they stay below, in my opinion, 44.78 and are able to, and are unable to, push towards 44.88, that you will probably see more chop, kind of like we saw last week, which has been actually really, really good range and really, really good trading. Or likewise, if you do somehow find a way to get below 43.93, which in my opinion needs to be a gap and a sizable gap at that. Otherwise, I think the potential for a trap is still there. If they can offer the market below here with a strong offer, then of course you could start to see more of a liquidation type move to the downside, right into, kind of what I was saying, August's low. And then the next point of interest would be around your 4,200 mark. So that's where I'm at with ES as well, right? Again, do I see change already taking place? No. I think you're just seeing the same stuff we have seen. Do I think change is possible? Change is possible every single day in the market. It's not up to me to decide when it is or isn't actually taking place. I can just use the tools that I have to best, serve myself in the market as I am trading. Now, let's take a quick look at the Russell here. I don't know why this is not letting me range it. It's kind of annoying. So if you followed me for any kind of time on here, we took a long swing trade in the Russell when the Russell broke below what I would consider to be the balance low. We took it off towards the 2320 area in the retest. And I had mentioned in a video, maybe it was a week ago, 2 weeks ago now, if we were to push up and trap again above this balance area like they've done time and time again, and then came back into the range, that would have been a trade I would be very, very comfortable selling and being short the market. It never worked out that way. You've now pulled back into the center of this balance range, which again, you could just put a line, right? It's not, this is what I keep trying to tell people. They come and ask me questions, this and that. And I always tell them, about levels, and they want to know how to find this level and that level. And I always tell them, listen, finding levels is not rocket science. Just look at the market and you'll figure it out pretty quickly. There's always going to be buyers above that are trapped, sellers below that are trapped. It works in unison, especially when you get into a balance range. So for me, I can just draw that line right there, and I can very visually see where is the market pause each and every time it tries to come up, and find buyers up here or find sellers down here. What happens is they get pushed back into the middle. From that point, they find either support resistance or get through. And then you continue into the balance range. So for me, R2I still super balanced. I don't see any change occurring in R2I at all right now. I think in order to get change below R2Y, you would have to, one, either buy above the top of this balance range and get above these highs, at which point, again, you should get a pullback into that to find support and a new buyer, which is the best opportunity to get long the market again. Or likewise, if we can sell below the balance range and get in and below these lows that have been trapped here, trapped here, trapped here, trapped here, trapped here. If they cannot get trapped, if they put below here, at which point I still believe you get a pullback test, which is the best opportunity to be short this market. For right now, R2I is range bound. It's still trading in a very large balance range. That balance range for me is about 2140-ish, to around 2300-ish. So until we break away from that balance range, it's just balance. It's nothing more. It's just balance. There's no reason to get overcomplicated about it. The market is stuck in a range. It has been stuck in this range since February. I do think R2I is setting up for the best trade of all the markets for when and if that does happen. But for right now, man, it's just balance. There's no point in getting, all up and at it and hands in the air and wave like you just don't care. Nobody cares. I don't care, and I am not interested anymore in trying to predict the next catalyst. So looking at R2I on the profiles, you're seeing the same theme over and over, aren't we? Right? The same theme over and over. Now, all you did was balance last week. All you did was chop around. You have a super incomplete high of the balance range. You have equally just as poor range on the, or sorry, poor completion on the downside. Until you break away, you're just in balance. So for me on the day time frame, I will be watching somewhere around 22.45, 22.57 on the upside as being resistance. We'd have to break through that for me to want to be super long the market. If failure to do that, obviously you want to be short the market. Likewise, 21.74 to 21.84 would be my initial support on the downside. Same premise. If it comes into there, find support, I want to be long. Gets below there, if retest it, I want to be short. Easy as that. I don't see it very complicated. I think change could happen in the market every single day. I think right now when we're looking at the profiles, I'm not sure I see it. I see balance. I don't see the same hip hooray excitement that we have seen in the past as far as participants wanting to buy everything. I think the FOMC meeting on Wednesday is obviously going to put some fear into the market, into the retail side. But again, if you've listened closely to what the Fed has been saying time and time again, they've pretty much told us already what they're planning to announce. I don't think it's going to be a big, oh my goodness, surprise. There's a lot of stuff floating around about China, debt, some of the stuff that's happening over there. Could that cause it? It could. Again, when a catalyst hits, you don't really know that it's going to hit if you're looking for something that's going to really cause some sort of strong liquidation type event. Now, I know this is carrying on a little bit longer than even I wanted it to, but it's good to go over this stuff 20 minutes in. This is my homework. This is what I do on a Sunday, and then I wake up Monday and just get after it and extract. One other thing I would point out that I did find a little bit interesting last week is I am a strong believer that volume will increase with selling. So if the selling is real or liquidation is real, your volume should increase and be higher than what you see on trend upside, trend days, buy days, so on and so forth. The reason for that is when strong money sells, they can't hide their volume. Their volume has to go into the market. It should increase your volume, at which point you get, higher volume as the market moves down. Likewise, once they position themselves, they let the rest of us move the market wherever we want it to on very low volume, very Momo-based volume, which is why usually when you get these strong moves at the all-time high and they continue higher, your volume will decrease. So when I'm looking at the NYSE volume, which is the only volume I use to measure, all the markets that I trade, which is the four of them, the Dow through what we just went through. Excuse me. We sold off last week on very low volume. In the balance, it's been very low volume. It hasn't been anything interesting except for Friday. Now, Friday was OPEX. Obviously, there was going to be an increase in volume. And Monday, you should expect to see hedges come off and see even, maybe another uptick in volume for anybody who's hedged off into OPEX. But we did see a big, drastic volume bump at the end of the day Friday. So that's the only thing that I kind of find is interesting is every other time we've made a move lower, excuse me, every other time we've made a move lower, we've always found higher volume as that move takes place. This is the first time that we've moved down to the 50-day moving average on lower to average volume. Something do I want to put a lot on it? Maybe not, but it's something I want to pay attention to. It's something I need to keep in the back of my mind, especially as we head into Monday following an OPEX, especially as we headed to Wednesday announcement from the Federal Reserve. And from there, let's see what happens. For me, my trading strategy is what it is. It's not going to change. I'm still going to trade the market the same way I've been trading the market, which is come in, do my business, get the hell out, extract my money, and move on for my day. That being said, hopefully this is helpful. Been asked to do this, again. I know it is a little bit longer, 24 minutes. People usually won't make it this far. If they don't, they'll miss good stuff. It is what it is. If you made it, congratulations. If you have any comments or questions, anything at all, reach out to me. My email is always in one of these things here. I'll post it or just comment and we'll get after it. Okay. Have yourself a good Sunday. If you're a football fan, enjoy football. If you're not, do whatever you want to do and have fun. I will check you guys again.